Ah, hello everyone. If there are people there, a reminder that I am delayed. Ah, so I'll wait until you're all in and begin commenting, and then we'll get going after a few minutes. Sorry, I needed some caffeine. Oh, audio's echoey? Is it still echoey? Um, oh, hang on. What about now, Damo? Can you let me know? I did just mute the audio input capture, so I want to see if that changes things. Yes, sweet. Dope. That should fix it. Oh, man, it's been a nightmare trying to get this all to work. I haven't done one in a while. We haven't been in the office at all, so I'm trying to just automatically hide the taskbar. What hope? Yeah, hardy. That's a bit better. Sweet, sweet, sweet. 12 watching. There was 22 waiting before. Just um. Alrighty, I think we'll just get started. No worries, Craig. I understand this is in the middle of dinner for a lot of people, but that's exactly why. I'll record them, and obviously you guys can watch it at any time. I do need to just double check with the date and the time we have, and touch base with you guys next week. Um, on the day and time it will be. But let's get started. We might as well. There's only we've gone from 22 down to 12, down to 6. So, for the 6 of you that are here, that's alright. I'll get started, and if anyone else joins, that's fine, or they can watch it another time. But I thought I'd use today's quick live stream to go back through the research reports I've done recently, which are of utmost importance. We'll then go through today's market update together, which many of you probably haven't read and haven't digested quite yet, so I can explain it both audibly and visually. Particularly, the DXY thesis that I think is going to play a major role in shaping how this year plays out, because the DXY and the USD obviously is a parameter of fiscal and monetary policy, where interest rate decisions such as FOMC overnight dictate, a lot of quantitative easing and thus liquidity. Uh, Mike Evans, they've gone to Macca's. That's right, Mike. Or maybe a few of them have gone to pre-purchase some Lambos. Either or. Uh, but yeah, I thought we'd do that just because I know, particularly me, I'm definitely someone that reads a lot and I learn a lot reading, but I find when I watch something and listen to someone explain it as they're visually showing it, that I learn a lot better and understand a lot better. So, maybe that's the case for a lot of you guys that haven't done my advanced trading course or whatever. I can actually show you visually and audibly how the technical analysis works, how it relates to the market update, the research reports, so on and so forth. So I will just quickly grab up. Sorry, give me 1 second. Just gotta notepad of dot points are quickly what I was going to run through. So what I will do first is I will go through the research reports, starting with the Bitcoin one, just quickly. Obviously, at the end of last year, what time? Yeah, I did it on 18th of December. So I think I literally did this at our local top, which is pretty funny. Obviously, we've made all-time highs numerous times since then. But I pretty much gave you my guide to finding out when the top of Bitcoin is in based on historical measures, which, I do want to say this isn't 100% foolproof, particularly this cycle. If you had been here for prior cycles, which I know a lot of you haven't, but some of you have, it's pretty much in every sense different to every other cycle given the changing fundamentals which are now impacting the technicals. So the easiest, I guess, case of that, and it's actually why alts have been impacted so poorly, so badly, is because now, where does the passive bid or most of the bid for Bitcoin come from? It comes from institutions, right, and traditional finance methods, and yeah, so institutions. So easiest case is, we've got governments now competing over Bitcoin. They haven't quite got in yet, but your BlackRocks, your MicroStrategies, obviously MicroStrategy was around last cycle, but nowhere near as prominent and weren't raising anywhere near as much money as what they are now. But I think BlackRock and Co now got over 120 billion in Bitcoin. And as a result, the easiest way I get, and I'm not sure if I made this so clear in the altcoin update research report, but essentially the easiest way to describe it is back in the day, what would happen is Bitcoin would pump and we'd get alt seasons because the money and all the profits made so heavily in Bitcoin would then trickle down to other altcoins and major altcoins. And back then there wasn't such a dilution of 1 million coins being created per day. I think if you go back to the 2017 cycle or 2013, there was something like 500 altcoins. So can you imagine when e.g. today, when we hit major support and we have a huge day of reversion, everyone isn't bidding and then max buying 1 million different coins and it's spread out, so thinly, right? Back in the day, even in the last cycle, is all majors would get bid on these reversion days, and all of retail would pour money into these coins, but they would pump so much easier because there's so much less to choose from. There wasn't 1 billion memes, there wasn't 1 billion different AI coins, there wasn't 1 billion different dexes. There was very few of each, which made it very easy to choose which ones to go into, and majority of them would get really high demand. So in any case, I do want to just quickly state, hopefully that's a pretty easy explanation of why this cycle is so different. And as noted, we're not getting that bid from profit taking or rotation from Bitcoin to altcoins because traditional finance institutions like BlackRock, they can't buy WIF, they can't buy Pepe, they can't buy Tau yet, although Tau is part of the Grayscale Trust or it's getting approved. They can't buy Phantom, they can't, which is Sonic, so on and so forth. So we're not getting exactly that rotation quite yet, but that doesn't mean we can give up on retail coming to the market. But in any case, this guide, obviously, as I sent out last time, I showed you 3 very important on-chain indicators. I also showed you 2 extra ones at the end that you can use. But more importantly, my global liquidity cycle thesis that's in line with both the Bitcoin cyclical halvings and more importantly, how that fits in together. And then you can even extend this to all fundamentals, right? So in this report, I showed you, election years, there every 4 years, just like the liquidity cycle, and how that plays into Bitcoin cycles, so on and so forth, and how it's actually combining all of these factors to understand when a bottom is in and conversely a top. And my thesis is right now is, I think if you're on crypto Twitter, which a lot of you would be, is that so many people calling for a top, right? The sentiment is so bad on there. I can't believe how many even major analysts I've seen call for a top, which they may be right. But it's pretty insane, right? And I find most of the time when majority of people are calling for a top, that is in fact not when a top occurs. A top occurs when pretty much no one knows, right? Because it doesn't feel like one. Whereas right now it kind of feels toppy, but I don't believe it is. And I go into heaps of detail into why. Now it's really important for your own psychological measures of investing and accumulation that you understand why we are and why we see that this year is to be fruitful for Bitcoin. And then flow-on effect to altcoins. And so I re-show this in this research report, the 3 different indicators where they currently sit. So I'll show you. So if we go into this, so the MVRV score is obviously a metric used to evaluate whether Bitcoin is overvalued or undervalued relative to its fair value. A high Z score, so typically above 6 to 7, will indicate a top. as suggested in all prior bull markets. And then obviously it's the same on the bottom where it picks the bottom. So every one of these indicators works both ways, right? So if we go into it, I think this is slightly old. The metric would be pretty similar right now though, but you can see in this red zone, that is usually when the Bitcoin tops happen, right? So this is the MVRV, this is the price of Bitcoin, and you can see that when these two align, when this hits the 7 zone, that's when Bitcoin tops and retreats for a couple of years. You can see it here, top, retreat, top, when it gets in here, retreat, top, retreat. 2021 cycle, bit of a different cycle because of putting in the major ATH and FTX repumping it to a fresh ATH on a insane amount of leverage. I'm not going to get into that now. And you can see here we pretty much aren't even close, so we're probably about halfway to that metric. And then it's using this in confluence with the pi cycle top indicator. So a very similar thing, right? Is the pi cycle indicator is using SMAs. I'm not going to explain them, but so on and so forth, and it's pretty much picked every bull market top so far, right? So you can see when these two cross shortly after each top that you've pretty much got an exact top, right? And you can see that these two are pretty far away. They haven't converged to crossover just yet. And then if we go to the pure multiple, which is actually a mining indicator, it's very similar to the other ones, right? So you've got a metric where typically above 4 suggests that miner revenue is high compared to its yearly average, and this usually coincides with market tops. So you can see when it enters this 4 range, same thing, picks the top, picks the top, picks the top, picks the top, just touches it here, picks the top. And obviously this is pretty somewhat obvious that mining revenue does decrease as time passes due to rewards being halved and price obviously not pumping as much as it would to prior cycles. So this should make a lot of sense to those miners out there, and it's using the confluence of all three of these at once to typically pick the top. And then what I want to say is that those are just metrics and indicators that I don't rely on. I would actually say I rely on those the least, and I'm unsure actually how they'll go this cycle. But it's really my cycle and liquidity analysis and thesis that you guys need to get down pat to understand why I am still bullish on Bitcoin this year, and it's because of the macro picture. It's not to do with any bullshit fundamentals that are also bullish, such as the President of the United States literally making his own meme coin, wanting to create a crypto strategic reserve, wanting to be the #1 crypto on the planet, crypto country on the planet, so on and so forth. But it's this cycle and liquidity analysis that I want you guys to understand, and this is how I'm going to relate it to both the meeting overnight with the interest rate decision and why quantitative easing is very important for Bitcoin as a parameter of risk, right? As a parameter of liquidity. You guys have heard me say that throughout the years so many times, and that's what it is. You saw in the most recent days with DeepSeek coming out, and the Nasdaq absolutely shit in the bed because Nvidia, the largest company on earth, lost the most value a company has ever lost in a single day in history. Also bounced very heavily today, but that's because Bitcoin is a beta asset. It's going back to what I was saying before, that the main bid for Bitcoin now is institutions. It's traditional finance methods. It's people like BlackRock. It's people like Fidelity, etc., etc. So if these guys are so heavily involved in the Nasdaq, they're obviously going to flee the risk-on asset first, which is Bitcoin. So on and so forth. So I'm not going to read through this all. You guys can obviously read this. I've included them in the market updates, which I will quickly get up now as well. But this goes through why I'm still keen on global liquidity. It explains my entire thesis, why I still believe we've got room to go. If you come in here, why I still think we've got so much further to go in Bitcoin's bull cycle. And then, I'll even show you, new strange correlations that I got from TechDev, but explain these heavily of, you can look to different commodities to see correlations of when Bitcoin should top. So if you go through this one, I won't go through this because we'll be on this live stream for too long. I don't even know what it's already been 15 minutes. So on and so forth, right? And that's why I'm remaining bullish right now in the face of so much bad sentiment, and I don't think it really needs to be said. I know this is an altcoin service, so it doesn't focus on Bitcoin, but it's important to understand that Bitcoin does dictate the entire market. But I suspect no one right now is bearish on Bitcoin in here. But this explains why you shouldn't be if you are, and why I still think we have a fruitful year ahead for Bitcoin. Not going to speak about 2026, but particularly 2025. And I think it will be dictated largely by what happens tonight and in the coming month or two, which is the best part about it. But going on to the altcoin market, the current state of it, its relation to Bitcoin, I do talk about the relationship between this, which is important to understand. But for those, I really put a lot of effort into this research report because I wanted those that hadn't been here in prior cycles to understand why altcoins were underperforming so badly this time around. But also those that had been here, in prior cycles that might not be understanding. Obviously, the major one that I've mentioned so far is the issue of fragmentation and dilution. You know, I think I showed the other day that on average, was it 1 million coins being created per day? Like, you just can't fathom it. Back in the day, I think in the last cycle, there was one point where there was 20,000 in total. And obviously, this has been a result of platforms like Pump Fund, which are amazing innovations. When you think about it, I think Pump Fund as a business has made over $450 million in Solana fees in the last year, which is nuts, right? But that's as of a result of 99.9% of retail traders losing on memes on Pump Fund, coins being created, fees going back, etc., etc. But I talk here why it's damaged the market so hard and why altcoins are particularly performing the way they are. So on and so forth, and I hope that all makes sense to you now, but also makes more important sense to you of the high conviction approach that we take, and why it's really important to not spread yourself thin over 20, 30, 40 coins. But even if you pick 2 to 3 from here, if you pick 5, if you pick 10, you don't have to go with all of them, and really stacking your chips in the right projects that will outperform others, because as noted, Bitcoin no longer is a tide that raises all altcoins like it did in every other cycle. I was even speaking to a friend about it today, and we were reminiscing on just how easy the last cycle was and the cycle before that, and how the feeling of just when Bitcoin went up in really easy conditions and everything else just went up. And it's no longer the case. And it's important as to why, understanding this, and why it's important to put your chips in the right places, because if you spread yourself too thin or you're focusing on the wrong coins, you're not going to make it. So really important research report to understand. Obviously in here I go through total 3 as a really important chart. I found this like one of the craziest correlation charts I'd ever found. And it talks about total 2, sorry, not total 3, total 2, its relation to Bitcoin, the correlation, and then its correlation to Bitcoin dominance. So you can see here that every time Bitcoin had this run up, it then had a consolidation period, a brief pause period at all-time highs at a major level, and at that point where it had that pause is when you saw this huge drop in dominance. Total 2's on top, but it's the same thing, right? So when Bitcoin had this huge run up, we had this huge total 2 stagnation. And it wasn't until Bitcoin dominance broke down massively in line until we saw that really fruitful next total 2 alt season. So total 2, for those that don't know, is the total market cap of of crypto less Ethereum and Bitcoin. Sorry, just Bitcoin. I'm thinking of total 3. And you can see this huge correlation between the charts, right? And this represents the 200 EMA in Bollinger Bands with a few different standard deviations, and you can see that the exact same thing has happened every cycle. Bitcoin consolidated under resistance of the 200 EMA. At that point, Bitcoin dominance stagnated, and as did total 2. But when Bitcoin then broke above that's when the real fun began to happen, and we saw a huge acceleration in Bitcoin, which created a huge acceleration in altcoins. And we saw a massive dump in Bitcoin dominance. Now, the only thing I'll state here is I don't expect a massive Bitcoin dominance dump as such, and I'm not going to try and predict on because of the exact factors that I was talking about before, right? Including the institutional bid, how they're the ones buying up majority of the Bitcoin and profiting on it right now. It's not retail. Thus, they're not going to be rotating into altcoins, particularly our altcoins. So, that's why it makes it so important in selection, and why you've seen me, which I will talk on Ondo a bit later. Chainlink is one, but now even starting to focus on where these institutions will put their money. So I sent through news today on Dogecoin's ETF. I sent through news on Solana's ETF. These are all being filed. So these are 2 great bets, right? Just from an institutional perspective, because if someone like a Fidelity or Cathie Wood's ARK, which probably takes on a bit more risk besides buying millions and millions of Dogecoin each day as a passive bid, or Solana, then retail is going to get a lot more confident, right? Same as Bitcoin. It's just a playbook. Obviously, it wasn't the same for Ethereum, but we can go into 100 different reasons why that is. And I won't now. So what I'm expecting to happen here is this consolidation, just like here, for Bitcoin to break above the 200 EMA. We get this huge acceleration. So here in this cycle, prices at 1,000, accelerated, for about a year. From 1,000 to 17,000 or 20,000 or so, a 20x. Here, consolidated once again under the 200 EMA, broke out, from prior asked 17,000, 20,000, all the way to 65,000. And then you can see that we've been under this the whole time. We even touched it on our app that we put in, which I find super interesting, for the whole of last year, where we ranged under it. And now we're beginning to see, a fake out, which you kind of had here, fake out here, but beginning to see consolidation under it. I then expect with quantitative easing, this is tying in all alts, all Bitcoin back to my thesis on liquidity, quantitative easing, and tying it all together, is that I expect fundamentally, if quantitative easing comes in, Trump demands interest rate cuts, we get a dovish Jebediah Powell after he skip, and the market's mispriced the dot plots, that we get that quantitative easing explosion in altcoins and in Bitcoin for this year, and that's when we'll take majority of our profits and actually realize a lot of them. That's the plan for now. It might not happen. I'm showing you historically what's happened every other time. These are really important correlations, and I'm trying to relate it back to my thesis so you guys can have confidence yourself in what you're doing and understanding why you're using, these really ready days or even just this last few months to accumulate dollar cost average, because you haven't experienced the explosion yet, which I've said so many times has happened historically. Now, once again, past does not guarantee future results. This is not a 100% chance to happen. Once again, I'm a technical analyst, and it's based on probabilities. Now, if this has happened every other cycle in the past, then the probabilities could be that it could happen again, right? And I'm going to play that because there's a risk in investing in cryptocurrency and losing a bit of money. There's also, to me, wealth-wise and financially, a huge risk in missing these type of runs that aren't going to be around forever. And maybe they have stopped. I don't know. But, if this is the last one, if this is the biggest one, I want to be a part of it, and I'm not going to risk missing it. So that explains, looking ahead, as I said, etc., etc. So that's why those two research reports are really important. I've even had a couple of people message me and they ask me questions, even on unit sizing. I get those DMs all the time. Obviously, there's probably one person per day, as you guys see in the chat, that asked me about whether to accumulate or dollar cost average. This is all here for you. It's explained in the onboarding. You probably see me say it every day. I know a lot of this service is me being the Hawkeye over this market for you, watching over everything. You get my buys and sells, so on and so forth. But, this is your own money. This is your own wealth. This is your own energy and effort that you're putting into this market, both psychologically, mentally, physically. So you need to take a bit of initiative yourself. Read the research reports. They're here for you. They're not here for me. I know all of this stuff. I write it out for you guys. And if you do the onboarding properly, if you stick to the high convictions, if you understand unit sizing, if you understand the process of accumulation and dollar cost averaging, and we get that type of run, then you're going to make a fair bit of money. So put yourself in the best position, right? Read them. Especially process of accumulation, dollar cost averaging. I've had so many questions, and I want to go back to this chat that I did send Frenzied, if I've pronounced that right. But he asked me, and people don't understand that timing this market is impossible. I don't care which analyst tells you they can, but dollar cost averaging in and dollar cost averaging out is the best way to approach cryptocurrency, given its volatility, because you capture all the prices, which majority of the year are down. 10 days of the year, Bitcoin goes on explosions, which make up majority of its price action. As I say in this conversation here, I hope that does come up on the screen. No one can time the crypto market absolute certainty. It's the most highly volatile market in the world. And, I use the example of, if someone was to ask me, March of 2024, right, is it too late? Should I not put my entries here and dollar cost average down, because FET was at $3.50, Phantom was at $1.25, Prime was at 27, and if you had actually dollar cost averaged at the highest prices crypto had ever been in March 2024, right, you would have accumulated altcoins at an insanely low valuation, because we had the crash of all of 2024, we've had the recent crash, etc., etc., and I've explained how the changes in prices, right? So never think that you're too late. Never think that it's not the right strategy to do. Whether you want to do it based on my technical analysis, such as hitting major support levels, or you want to do periodic timing, which I suggest all of you inexperienced traders should do, and that's your best bet. Whether it's daily, bi-daily, weekly, bi-weekly, that's your best option to accumulate. And it's also your best way to take profit. So, I go into this research report here. Obviously, there's Trump mania. If you need to catch up on the last week, I did do a news article kind of capturing all the events of the last week as well, which you can kind of read as well. And it was a lot to stomach this last week. We obviously had the disappointment, I feel, of Trump pivoting from a Bitcoin strategic reserve to a crypto strategic reserve, which I think spooked the market a bit. But what can we do? We can't predict the future. Take it a day at a time. Use these current dips and red days as opportunities. I feel like pretty soon we'll know whether we're really getting that quantitative easing at that liquidity cycle thrusted into the market, and we can go from there. So what I'll do now is we'll go through today's market update. We've been going for 25 minutes, so 10 to 15 minutes to wrap up the first kind of live stream back. I think this has been the first one back, hasn't it? I assume so. And weekly, we can figure out new things to do. So I think, this week I said I wanted to go through the research reports. I will go over trading versus investing briefly when I talk about Ondo in a second. But we can touch on that more as well in the coming weeks. And then next week, I'll obviously do a run through of what I'm going to do my talk on in Brisbane, which, as a reminder, on Friday night next week. If you're in Queensland or in Brisbane and you want to come, it's completely free. I'd love to see as many of you there. So just let me know. So today's market update, obviously we're heading into this interest rate decision, which I've spoken about is so big. You got the summary of today's update. It's probably pretty hefty. I obviously link the research report on Bitcoin, research report on altcoins, research report on Trump, recap article, so you're fully up to date with how I see things, which is important that if you're purely following what I say and what I do, that you understand the lens I'm seeing it through. Obviously, we had DeepSeek, which if you missed it in the fundamental Discord channel, I believe, I posted my summary of the DeepSeek situation, which I won't fully read through now, but I think is rather over the medium to long term, despite the short term shock, quite bullish for Bitcoin. It's awesome for AI competition globally, but more importantly, it makes a unique standpoint for Bitcoin, because if these countries are going to be fighting over AI, which is something you can fake, something you can change, the supply of chips can change, whatever, you can't change the supply of Bitcoin. No nation state can alter Bitcoin. It's going to be an arms race to see who gets it on. And, I think the point I was trying to make it here is, if America begins losing in AI, well, maybe they need to pivot to crypto and to Bitcoin. As I say here, it's fixed supply, regular block times, energy-backed security. It's a very attractive commodity investment now for nation states, and it's exactly why you see Trump and the US pivoting towards it. So that's important to understand. Other brief stuff, as mentioned, Dogecoin ETF, Solana, Grayscale, so on and so forth. But let's talk about tonight. So tonight, the Feds have a 97.9, well, we can actually, let me just see here, CME. Look at the live odds right now. I would just say, sorry, after the research reports and everything I've done, whilst I just sit here, it is a bit delayed what you guys are seeing. But does anyone have any questions, comments, queries about the research reports I just went through, high convictions, how I'm seeing things in the altcoin market, or anything you need me to re-explain? I'll just wait 30 seconds whilst I have a drink. You guys can let me know. Alrighty, doesn't look like any questions are coming through. That's fine. Alrighty, we'll move on. So I think at the time I posted the market update, it was 97 point something percent, 99.5% chance amongst consensus that they will pause, or as we like to call it for those OG members, the Jebediah Powell skip, which is the language we like to use when he was gooning around in the bear market and raising our rates and then not refusing to cut them. So what matters tonight is, as I mentioned in the market update, is, it's priced in. the current unchanged interest rate. No one's expecting him to flip. Thanks, Mike. I appreciate that. But, you know, what's more important is, as I say to you guys each time, and what the market reacts to, particularly the dot plot revisions, is what language Jerome uses, whether that's hawkish or dovish. And essentially what that means is bearish or bullish, for those that are unsure when I keep using that language. So, you know, as I say here, the Fed chair, Jerome, maintains a strict or hawkish stance. You know, we're probably expected to see a spike in bearish volatility to the downside, and that's important to understand where my charts come in and where you might see price land down here, which we'll go over in a sec. And then, more important, conversely, if we get an unexpected dovish Jebediah pal, sorry to keep calling him that, we should begin to rally and make that next leg up. And I think this will be kind of very promising for altcoins in particular, which has, the absolute highest risk on asset on planet Earth, requires quantitative easing and that kind of structural market confidence to begin investing in them. And yeah, obviously the main difference this week, which will be super interesting, is, this is the first interest rate decision, in over 4 to 5 years under Trump. If you saw his comments this week, I think I placed them in the Discord. Yeah, Damo. Is that he said he'll tell Jerome to cut interest rates. Unfortunately for big old Donald, they're not a government agency. He can't dictate what the Fed does. Whether he does have an impact on them, I do not know. But it's going to be interesting because it's hard to believe, that it's going to be hawkish. I feel like most people think it will be, but I just don't think it will be. But I don't think it's kind of priced in the dovish sentiment, as I say here. Dot plot coinciding with... Oh, sorry. And then I wanted to obviously go through this thesis that I placed in a previous market update, which is a really eerie thesis, but I'll explain it technically if those don't understand the charts. So what we had in 2015 to 2017 was, I think Trump begins coming to fucking presidential race here. And what you see is all these promises made by him about a strengthening USD. We're going to place tariffs here. I'm going to do this, this, and this. And USD begins to rally on what looks like a Donald Trump win. Hits the 141.4% extension of this range. And you can see the results thereafter because they prioritized rate cuts. They prioritized QE, and the USD got absolutely hammered because Trump and his mates wanted stocks to pump. And I'm sure this time, now that he has a large pie in cryptocurrency, that he wants that to pump as well. So we then fast forward, we have, Trump comes in, Biden comes in here, blah, 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 4 years from 2021, to 2024. Obviously, right at this point here is when the market of Bitcoin, cryptocurrency, and all stock markets actually topped. And that's because that was when hyperinflation got out of hand because of COVID stimulus packages and more. And the world began to burn and the USD demand began to rise, which happens. Then we get to now, right? So we have this 2.5 year range like we did back in the day, probably around, when was it? Probably July, August, September is when people are like, holy shit, like he's really going to win again. And you see this massive rise in the USD besides once again on a Trump likely presidency. We break out of this huge kind of very similar range that you can see ranging here. And what happens is we get on this massive push where, once again, it's the same thing. Trump, comes out, he says, I want a strong USD, I want a strong US dollar, I'm going to tariff this person, I'm going to tariff that person. Right after the inauguration, and we see this top pretty much right at the inauguration, and it was the same here. We've seen a massive drop. So I think it's from 110.2 0.3. It's already dropped as much as 3 points in the last 2 weeks, a week. 2 weeks, 2.5 weeks. It's retested the top of the range, just like it did here, and it's bounced so far. So if we go back to my market update, I talk on, market has a funny way of rhyming. If history repeats, it could be the catalyst for this major move. If he comes out and he's dovish and he wants to cut rates, well, the USD is going to shit itself, right? But we had a very similar thing back in that cycle of the USD where, mid-January, early Feb, we did get a little bit of a pump, and then actually started this bearish market structure that lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, so on and so forth, right? So, I'm not ruling out that if we go back to this market update, I use the exact same fractal from back then that we get kind of, if we do get a bit of a hawkish Jerome, but Trump steps in or something happens, then we could see a similar pattern play out, right? But here is just really using those fractals, coinciding with my liquidity thesis, so on and so forth, that this is what I'm seeing is happening. It's almost like a replay of back then. Doesn't have to be just a thesis, just a technical analysis theory with clear invalidation, but which would be, comes out very hawkish, or inflation rises heaps and the US dollar gains strength, so on and so forth. But no, as I've stated, if he is dovish, I think full Bitcoin will really rally, and I think altcoins will really rally throughout February and March. And I'll be looking to take a lot of profit off the table if that is the case. Just reading some of the comments. Lots of recent days crash. Surprising me that just because China. So Mike, it's an interesting question. Just before I go on, because I do see here the S&P saw a 3.5% drop. Nasdaq saw 6%. I'll show these charts for you. You can see how hard it dipped, but how hard the reversion happened. And the reason why is because of this, Mike. And you guys got to remember that the S&P 500 is made up of the Magnificent Seven. Nasdaq gets carried by Tesla, Nvidia, those type of companies. We're not on crypto. I want to go here. And the reason why the market crashed is because not so the entire market did, but Nvidia from up here, so a couple of days ago when this news came out, dropped as much as 22%, traded like a meme coin. Could you imagine? In crypto, that's what happens. In 2 to 3 days, a 22% drop. This happened to the largest company on planet Earth, Mike. So your question is surprising me that just because China brings in an LLM, the market freaks out. It wasn't so much that. It was that Nvidia investors and which is the majority of people on planet Earth at this stage, freaked out because essentially the news was that this company with $6 million, not hundreds of billions of dollars in funding and weaker chips and so on and so forth, could do what American companies couldn't do. And so investors from a natural standpoint went, holy shit, this company that we have been literally pumping, so, like pumping since 2023, that's up over 13x, become the largest company on planet Earth. It was the largest crash. So back to what I was saying, they saw it as overvalued. Obviously the news has cleared up a bit, and there's a bit of controversy around it, but that's to explain your question, your query, Mike. It wasn't so much the entire market, it was literally just the one company that has carried the entire market, had the largest drop off in human history, well, in financial markets history, and so obviously that brought the rest of the markets down. You can see how strong these had bounced as the overreaction. As I showed in the market update, on this pivot from early January, the S&P 500 literally cleanly tapped gold pocket, but look how much it's bounced, just in a matter. I'm on the 4-hour chart, but this is in a day, right? So it's almost pretty much fully recovered. 2.6 of its 3.6% drop. So yeah, market overreaction for sure, but investors are dumb. Hedge funds are dumb. The people that we trade and invest against, most humans, are dumb. Sorry to be a bit rude about it. That's just the truth. And majority of, and particularly crypto, is based on psychology and human emotion. When they see these things happen, they overreact, like Damo said, and then they kind of come to realization on certain things, and then the market gets reversion. But hopefully that explains then, sorry to go a bit off track, but the DXY thesis ties into my liquidity thesis, that then ties into my Bitcoin and altcoin thesis. I really hope that we do see this happen, and this was a fake out above a massive range, because I do believe if the USD continues to climb higher, that it will put a stranglehold and a bit of pressure on the stock markets. And as I've explained and shown, Bitcoin is a beta asset to particularly the Nasdaq, that it may not be favorable despite the fundamentals. So quickly to go back through the result on Bitcoin as a result of DeepSeek is that obviously Bitcoin, was as high as, I can't remember the day before, 105,000, let's call it, and it pretty much dropped to 8,000 in a day or two over that weekend. As as I kind of reiterated so many times, short-term bearish, very long-term bullish. Do you want to quickly just have a little quick look at Bitcoin? How are we going? Still same price. Okay. Sorry. Where was I? And we made that reversion to, and this is why the market update. Oh, sorry, well, last week I did it a bit differently to the market update. I did a Bitcoin specific update to tell you guys the levels to watch out for over the weekend and heading into FONK that were really important to trade and invest around. You guys got to remember, I have 200 or 250 of you in here. Some of you use my analysis to leverage trade. Some of you use it to dollar cost average. Some of you just want to know what the hell is happening. Um, and if you go to to this update, I made a really big point here. Break below 100k is not off the cards, despite the overall fundamentally bullish right now. And I said, this is usually when the market pulls back. I'm telling you that the market is likely to pull back. I had a lot of you negatively comment over the week, oh, what's happening, or why is Bitcoin shitting itself? And, I'm telling you why it is. When the market every single time is almost at extreme greed, it almost always pulls back. And I was saying, there's no reason to say that 90k is even off the cards in such a situation when the market does need to cool off. But, I made a really point that, that 236 shallow pivot that comes from when we began to develop bullish market structure to break out of that range at 58k. I'll show it now. If we go to the daily, I'll turn this off. So when we began that bullish market structure from 58k, was it this drop? 52k, sorry. We're making high lows, blah, 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 blah. Sorry, it was that last dip there to 48k that confirmed, 58k that confirmed it. And if you draw, so this is how I draw Fibonacci's, that those that want to know. That's a very important pivot to me because, here we'd failed to make a higher high over the lower high here that put in our last lower low, which is how you confirm a structural change in market structure. I think if you remember, I was trying to do predictive market structure here, guessing that the probabilities would be that we changed. And a pivot to, a short, shallow rotation to the 236 Fibonacci extension is a very bullish signal that holds. And the confluence here was that it lined up with our POC and our high volume area. And the reason why you see me calling it a high volume area now as opposed to a point of control is because I'll show you guys how to draw these if you want it. So it's this tool here, which I think you can find, here on this fourth one down on TradingView for those that have TradingView, fixed range volume profile. And you can see here that when I go here, whilst this is the point of control and we didn't touch the point of control, just look at what the indicator is actually showing you. It's literally showing you that like from 96k to 98k, pretty much at $2,000, like at all price points, is the volume's almost equal. So that's why I drew a box rather than that's why I'm drawing a box now as opposed to just the POC because it matters. They're all closely aligned. If a lot of volume occurs up here, this POC will change to here, most likely. A lot of volume comes in there, do you know what I mean? So high volume area, most likely to get defended was our biggest high time frame major support below the psychological level of 100,000. Etc, etc. So we came in, we cleanly tapped that shallow rotation into the high volume area. If you turn on the SMAs, the 50 SMA, was right here as well. So into a huge area of confluence, and we bounced very cleanly. So yeah, that's what happened over the weekend to explain technically and via the charts. It's good to see us bounce. We've had pretty strong reversion as sorry, I was a bit lost. But I'll show you why it's important to follow the market updates if you do want to know where price is likely to bounce from, because if we broke below there, I was definitely favoring a sweeping of the major lows at the bottom around 90k into our major 382 and range lows. So going back to today's market update, sorry, on the BTC. Showing you why we bounced there, and as you can see in today's report, showing that box, why I'm drawing it not as a POC. And really what's happening now is, I don't have to show this on here because I can just show it on here. If we go back. Looking at the range now, high volume area, major 236, value area low, sorry, is the confluence of the range lows too. We've got all that liquidity under there. That's why it's likely that we sweep there if we do break down on a bearish one. But the most important aspect to understand is the confluence of resistance that rejected was the value area high, but it was also a very clean downtrend that's developed on Bitcoin, which is major diagonal and horizontal confluence, right? And that's currently what I'm saying is tonight we're going to hit again. We're either going to do, this and break upwards on a dovish, or we're going to break down and we're going to retest this level and respect the downtrend. And depending on how hawkish, or come down to here. So this is why it's really important to follow the market updates. So, I think Sol Ant, apologies, Mr. Ant, for not knowing your full name, but he asked me before, if the Feds leave interest rates as it is tomorrow, how will the market react? I'm telling you exactly how the market will react if Powell is dovish or if he's hawkish. If he's dovish, I believe that we will break diagonal resistance and horizontal resistance. We'll reclaim the value area high, which is our most important resistance. And I think we'll head back towards at and maybe even break above. Can't tell the future. Once again, this is based on probabilities. And then obviously if he's hawkish and he comes out and he says, rates are unchanged, but we're not liking the data, we think inflationary pressure is too much, and we're actually not going to cut much this year, well then, that's when we know we're pretty much stuffed. Not stuffed, but things might have to be reevaluated because that tells the market quantitative easing isn't going to be as likely, which means liquidity isn't going to enter the system as easily, so on and so forth, and altcoins won't get as much of a run as we want. So that's when you can begin planning for 97k. If that doesn't hold, you can then plan for here. Obviously, in prior updates, I've shown why the ultimate range loads at 85k is super important. I'm not going to bother talking about below there because I'm not a bear. And we're going to do well, and Powell's going to do the market right, and we're going to pump. So that explains the Bitcoin range. Hopefully, I'm not sure if Sol Ant's here. I'm not sure if anyone else needed to understand what technical analysis is. And, I explain this at the end, I think. So I say, to those that think I can tell the future, I can't. This is done on probabilities. I still have people that have been here for years that get a bit antsy with me when I say price can go up or down. Sorry to tell you, but that is literally the case. We can't tell the future, but we can plan for both scenarios, right? Which is what we're doing. So I believe it should be dovish. I believe the market should pump thereafter, and I think it'll be an awesome setup for us to invest a little further for those that are accumulating right now to get great prices, and hopefully we see even stronger reversion to new all-time highs, which I love that this is all occurring on the very day and night of Chinese New Year. If you see the historical 30 days returns for Bitcoin in the last 5 years, 14.2, 10.5, 7.8, 15.6, 12.3. What year is it this year? The year of the rat, I believe? Year of the rat. Oh, no? Someone want to tell me in the comments? I don't remember what it was. But in any case, give us that confluence. I'd love to see it pump, and I'd love to see it work out again. Alrighty, we've been going for, how long we've been going for? 45 minutes. Okay, I'll wrap this up, leave it under an hour. Let's go back to the charts. I quickly want to show you some altcoin charts because that was all Bitcoin, that was all DXY focus. You're seeing huge levels coming in on altcoins that you might not realize. So tomorrow what I'm going to do is I'm going to update every single high conviction token analyses charts with accumulation dollar cost average because I want to show you guys exactly where they all sit. But you can go to pretty much a lot of these major coins right now and see, so if I go to FTM USD here, let me just hide that anyway. You can see from our bear market lows to our bull market highs this cycle, we've now fully retraced the 786. You can see how important this is, just looking structurally at the candles, how important this is as an SR flip. We reached as low as, 43 cents this morning. We've already bounced as much as, 10+%, I believe that would be roughly off the top of my head. Boom, exactly 10%. So structurally, really great level to get more Sonic, more Phantom. I'm still high time frame bullish on it. Not going to go through that now. Oh, year of the snake, not rabbit. I said rat, not rabbit. Oh, year of the snake. Thanks, Alex, and thanks, Evan. Alrighty, well, let's slither our way. Hey, let's hope that Bitcoin. Let's do the Chinese New Year pattern. I'm going to say, let's have a bit of fun here. Just get an extension down. See where the 618 is. I feel like that's the golden number for the Chinese as it involves an 8. Let's hope that Powell and Chinese New Year deliver the Chinese New Year snake pattern to 117k. I'm going to save this. Snake pattern, Chinese, NY. This is how you can have a bit of fun with your charting, or maybe I'm just the only loser that would do this. Alrighty, in any case, where was I? FTM at a major, 786 retracement is one of the best levels you can do to invest. That's literally the Fibonacci's that I use in a bear market to invest into altcoins. you know, WIF has one of the greatest swing failure patterns you'll ever see in altcoin history. My advanced trading course group, I spoke about this today, as this is a major pattern that we all trade. But if you picked out the greatest weekly low of WIF when it broke out into its infamousy, right, which happened at, you know, at the top of last year, we saw WIF go from $1 to $5, so it 5x'd in a month as a major meme altcoin at the top of the market in that last Bitcoin range at 73k Bitcoin. You could have waited an entire year, simply marked out that exact major low and said, the only other time I'm going to leverage trade or invest back in WIF is when we sweep that weekly candle and grab that liquidity in a swing failure pattern, and I'm going to trade it. And you would be up from 6 hours, 8 hours ago, 32%. You didn't have to know about the severe news. You didn't have to know anything. Just simple technical analysis. It's as clean as it comes. Now, I'm hoping WIF can continue for those WIF holders. But, you know, importantly, I can show you so many other charts that I've now marked out that are hitting major levels. Look at Pepe perfectly hit its major golden pocket this morning as it deemed on that. This is how you can use in the face of fundamental bearishness and why the market's dropping technical analysis to plan ahead, right? Mark out these levels. It's already bounced as much as 12% from its golden pocket. So, you know, that's WIF, Pepe, Phantom. I'll just show those for now. I will quickly go over Ondo, and quickly, I don't have enough time to go over trading versus investing, but a simple explanation to understand in very heightened times of volatility and when I guess the market can go either way is I want to show you guys a strategy of trading as opposed to investing. As with leverage trading, you don't have to put up as much margin. So the easiest example I could say is, let's just say our unit size for me is $1,000. Let's just go with that. And, you know, as opposed to putting 5 to 10 units of spot into Ondo, and like, let's say we get bearish and we break down, I'm like, well, fuck, there's no point in me selling this off now. I'm down so much. And, you know, I might be asleep when that happens. You know, I don't know what market forces come into play. And then I'm bag holding Ondo and I need a DCA to fix my entry. I can just use trading. I can just, I will go through Hypev, good one. I haven't actually looked at the chart because I don't need to look at the Hype chart most of the time, but it's a beautiful chart. Where was I? I can use 10 units of risk, if that makes, 10 units of size. So let's just say I use, you know, I put up $1,000 in margin. I use 10x leverage. So what does that get me? It gets me a $10,000 position size, which is the same as buying $10,000 of spot of Ondo, but opposed as to doing 10,000 in spot on a spot exchange, let's just say I've used $1,000, 10x leverage, and I've used my spot loss to here that if my spot loss was to get hit, I'd lose $1,000 and I'd lose 1 unit, right? If my unit was $1,000. As opposed to just bag holding spot, and you know, tonight, if fucking Ondo crashes 40% on a really bearish, horrible thing, and it's at 90 cents, I don't wake up and I'm bag holding. I've been stopped out, lost a unit, move forward, and then I can think about adding in spot at a much lower price, right? So tactically, it's a much safer, I guess, option. If you don't know how to do this, don't worry about it. I did make the comment today that if you have no idea how to leverage trade, that's fine. Most of you shouldn't be doing it if you don't understand it. You don't understand risk management, stop losses, so on and so forth, leverage margin, all of it. That you can just do the same thing, get $10,000 of spot here, and then you could put in a sell order on, say, CoinStash, and you might even on some exchanges be able to use stop losses with your spot and just set it for $1.22, and then it'll automatically sell your Ondo position whilst you sleep, or if we get a major crash, and you'll lose $1,000, but you won't be bag holding Ondo lower. You can then use the rest of the 9 units to decide, well, hey, price has come down, you know, to major support at 70 cents on Ondo. Okay, I'm now going to put the 9 units I have left, I'm going to use 5 of them to buy here, and I'm going to use the other 4 to DCA further, and you're actually in a better position than you otherwise would have been bag holding, because you've now got much cheaper accumulation of dollar cost averaging, which will give you a greater ROI in the future, right? So I wanted to quickly explain why I'm trading Ondo as opposed to investing for the time being. I'll keep you guys updated on that front. You know, it's pretty crazy. I think I entered this trade, you know, a while ago now. It's just been absolutely ranging, not hitting my stop loss. Slightly in profits at the moment. Doesn't matter. I think it'll get decided tonight, and who knows, maybe be stopped out tonight. But yeah, Tau is one that's been awesome. We bought this at $440 yesterday or the day before. Yeah, I think we bought it yesterday. Already up a good 10%. So we made a 10% gain there already. The cool thing about Tau is that it's reclaiming a major horizontal levels after looking horrible. Let's see how this downtrend here. Okay, okay. We're now seeing a much larger breakout on Tau. So some upside targets here, so you guys can see how I chart. Hopefully we see that downtrend, diagonal downtrend break means something. See where the upside, golden pocket, perfect, right? So if we're looking for resistance purposes, the sweepings that could happen on Tau would be these major daily and weekly candles, right? That would be, if you're looking at it from a candle perspective, what do those line up with? Okay, it lines up with the major upside resistance golden pocket. So if we were to get continuation, I'd expect a major resistance level to be these highs, because it would want to grab the liquidity above these highs, and it could reject the golden pocket, but then also, given it's a resistance level, a level you want to see flip to support to then take out ATS and further. So that's Tau, and quickly the last one, Hype, and then I'll finish with Bitcoin dominance. Here we go. So Hype's an awesome chart, right? And you know, it was probably due for, if you go on like the 4 hour, I'm sure there's some 5 count on the way down where you go, 1, 2, 3, 4, 5. So, but Hype is awesome, and it, like Tau, is that it's kind of just weathered all of this volatility, right? Coins as of a week or two ago can be down as much as 50%. Hype's just kind of remained between $20 to $25, but namely 20 to 22. Look, Hype is pretty much fundamentally one of my most bullish coins. It's why I added it to high conviction straight away. It's why I top blasted it 2 days after it was launched. Sadly, could have gotten lower, but it's why we're sitting above 100% gain on it in a month, because they're going to keep bidding this coin. Hype Foundation themselves burn and bid this coin. They use their own fees that they generate, which I showed you guys the other day on a big trading day, which will be tonight, tomorrow. They had over 22 billion in volume, and the protocol itself was able to make $10 million on a single day alone in revenue. They then use this to buy back the token and build out the ecosystem more. This is one of the best things I find a token or a project can do, is when they buy their own token. XRP Foundation, they only sell their token. They don't reinvest in it. They don't buy it. Brad, all of them, all they do is dump. They don't buy it. If they believed in their tech, I don't know why they would sell it. You'd think they buy it. So that's an easy comparison. But really what I want to see Hype do is then a similar thing. You've got this pretty distinctive downtrend. I think, if we get a dovish case tonight, you'll see Hype pretty quickly take new highs. If you don't, maybe we see it to continue to range around here. I will say, Hype is definitely one of those high conviction tokens that I have heaps of exposure to. But if I do see it drift lower somehow, into the 20 to kind of $15 range, this support here, even though I have it from lower, around $9, I'd probably buy more of it because of how confident I am on it outperforming. And a reminder that, we want to be picking high conviction tokens. We want to be stacking ones that we know will perform well, not just ifs, maybe buts, and spreading ourselves across 20, 30 coins. If you're someone that wants to stack, just a single coin or a couple of coins, I definitely think Hype is one of those ones that you should definitely look at. I know Evan, for instance, who asked about Hype, he's definitely someone that you've probably seen as a big Pepe bull, Prime, but he's a massive Hype bull, and he's probably placing, he can probably tell you, but he's probably placing a lot of his chips there because he understands how bullish it is. So in any case, awesome to see that Hype, through all the FUD, that even though it is down, it's made a nice rotation. It's making its way up. Even from the lows of the inauguration, it's up as much as 25% and was up, as much as 48%, 50%, within a week or two from the inauguration, before we got this deep-seek bounce, but I do expect the downtrend to break, so on and so forth. Something cool that's developing on the Bitcoin dominance chart that I find intriguing is we may be getting a backtest of a major trend line here. That was the case for the bullish market structure throughout this entire cycle on Bitcoin. We broke that cycle and we actually made a lower than for this higher high, and we're now back testing this trend line. So I'm not too sure what's going to happen. I can't tell the future, but maybe we reclaim this and this cycle theme continues and Bitcoin outperforms with Michael Saylor, MicroStrategy, and co buying billions every day. Or maybe quantitative easing comes in, ETH begins to rocket, Solana gets even higher, meme coins such as Doge and Pepe make a really huge return, and we get a drop to these lower levels, 50, 48%, and see, alts begin to finally outperform, and this is when we can begin to take huge profits, February, March, April, and then reassess. So, I think that's it for today. I've gone through a lot, research reports, articles, the market update. We've gone through several altcoin charts. Um, I will speak on Rune tomorrow. I'll do an update for a demo just to update everyone on that, given the black swan that we copped, and whether I see it as an opportunity to accumulate further or whether there's no point in adding risk. Any questions, queries, comments about tonight's live stream, anything I've gone through, send it into the chat now. I'll wait 30 seconds to a minute, and if we don't have any, then we'll wrap that up, and hopefully you guys got something out of it, whether it was understanding something a bit better visually or audibly, or seeing me chart, how to draw a fib, how to draw a volume profile, understanding the major levels, Pepe, Phantom, Hype, Whiff, they've all reached. Now is now or never on these pullbacks to see if these altcoins can really rock it. No Ace Demo, hopefully see you in Brisbane as well. I'll post that link again. We'll wait another 30 seconds to a minute. I agree, Rick. Great session, and thanks for always coming, Rick. You're the man. Shout out Evan as well. Shout out Make It Muller. Alrighty. Thanks, Mike. Thanks to the 15 or so. I think we ranged between 12 to 17 or so that were here, which is a slight shame because I think like 40 of you voted for Wednesday. And then like 30 of you voted for 7 p.m. So maybe a couple of people forgot or something came up, but hopefully you can all rewatch it for those that didn't. Exactly 60 minutes now, so I'll wrap it up. Thanks everyone for coming. Appreciate it. We'll speak in the Discord. Let's go, Jerome Powell. Guide us to the promised land, baby. And let's begin to really make some gains and take some